It's Thursday, the 26th of August, 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. And if 5 minutes isn't enough, then find more news and interviews in our longer daily podcast called Fear and Greed. In today's headlines, the two market leaders in the buy now, pay later space announced disappointing earnings, raising concerns about the sector. Plus, a COVID vaccine passport proposal to go to National Cabinet. One of Australia's corporate leaders, Kerry Stokes, retires after 60 years of battles, and how to make $2.75 billion in just 90 minutes. Our lead story today: few startup sectors have been hotter in the past couple of years than the buy now, pay later players. But earnings yesterday from the big two in Australia show that neither are making money, as they spend huge amounts on marketing their services to gain both customers and merchants. And there are some signs that bad debts are starting to rise, another risk for the sector. Market leader Afterpay, which is being acquired by US payment giant Square, said marketing and staff expenses surged over the last financial year, and losses from bad debts were higher as it took on riskier customers. It meant the buy now, pay later group's bottom line was much worse, notwithstanding the platform handled $21 billion in sales and has 16 million customers. Australia's second largest buy now, pay later group, Zipco, reported a drop in earnings, even though it had 7.3 million customers and handled nearly $6 billion in turnover. The surprising loss sent its share price tumbling and reflected big spending on global expansion. Startups, and particularly tech startups, aren't supposed to make money. Or, more correctly, what they make plus more is reinvested into the business. There's plenty of competition in the sector. Regulators are looking more closely, and hardly any of them are turning a profit. There's no sure thing in investing. Buyers beware. In overseas news, Delta Airlines will charge unvaccinated employees $200 a month extra to be part of its health plan. In the US, the majority of workers with private health insurance access it through their workplaces, and the Delta announcement is part of an effort to convince Americans to get inoculated. Some employers, including American Airlines and rail group Amtrak, have mandated vaccinations. US President Joe Biden said he'll stick to his plans to withdraw all troops from Afghanistan by the end of this month, despite pressure from European allies to remain. About 70,000 foreign nationals and Afghans have fled the country over the past fortnight as the Taliban took control. And Canada's Prime Minister Justin Trudeau, who is seeking re-election, said he'd impose a 3% surcharge on Canada's large banks and insurers if successful at the poll. He said they'd posted extraordinarily large profits through the pandemic when everyone else had had to tighten their belts and should do more. Locally, a proposal for vaccine passports which would allow fully inoculated people greater freedoms, including access to restaurants, bars, sports concerts and travel, will be presented to National Cabinet on Friday, according to media reports. It comes as New South Wales recorded 919 new cases yesterday, a new high. Victoria recorded 45 new cases, the third day of declining numbers. There were 9 new cases in the ACT, and its lockdown will remain until at least the end of the week. National Australia Bank boss Ross McEwen has suggested Melbourne Cup Day could become Freedom Day if vaccination rates continue to rise. November 2, the day of the Cup, is around when Australia is expected to hit a vaccination rate of 70%. Mr McEwen also raised the idea of mandating jabs for bank staff. ANZ has lifted its Sydney house price growth forecast by 4 percentage points to 23% this calendar year, and it expects prices to keep rising for the next 2 years, albeit at a slower pace. Canberra will be the best performing capital city with price rises of 24%. Hobart prices will jump 23%, the bank forecasts. ANZ expects Brisbane house prices to rise 21%, Melbourne by 20% and Darwin by 19%. Kerry Stokes is among Australia's most successful business leaders, alongside the likes of Rupert Murdoch, Kerry Packer and Andrew Forrest. The 80-year-old billionaire chair of Seven Group will retire in November, though he'll remain an advisor and, dare I say, a very influential one. The announcement came as Seven said it had lifted core revenue and profit. Seven has interests in Seven Media, Coates Hire, Westrack, and recently purchased 70% of Boral. And finally, it was a wild ride for the shareholders in WiseTech, the listed logistics business. Yesterday, its share price jumped more than 50% in the 90 minutes after the opening of the bourse, triggering a halt in its trading. WiseTech had earlier announced an 18% jump in revenue and a 33% drop in profit, Both were better than expected, but not enough to trigger such a surge in its share price. Company founder Richard White owns 40% of the stock, and in about 90 minutes, his wealth increased by $2.75 billion. When asked by the ASX, the company said it knew of no reason for the massive jump. It was allowed to trade again. It dropped back, but by the end of the day, finished up more than 28%. There's something going on there. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning, and search for our longer daily podcast called Fear and Greed. We also release a daily interview. Today we're talking about how Australia is missing great leadership and great political speeches. Don't forget to follow us on LinkedIn, Facebook and Twitter, or go to fearandgreed.com.au. I'll be back later with the afternoon market report. I'm Sean Aylmer. Have a great day.